What's going on, guys? I want to give you guys the simplest risk management strategy that you guys can use for your stop losses to become a lot more consistent, a lot more profitable, and a lot less stressed. What we're going to be looking at here is the NASDAQ 100 futures, which is ticker symbol NQ. So in this strategy, what we're going to be using is the 5-minute time frame. You can use this on any time frame. Just the only reason I'm using the 5-minute time frame is because, this is predominantly the time frame that I use to pick my entries and exits for my intraday scalps and day trades. A lot of you guys may have heard me talk about the 1-bar stop. You guys have also heard me talk about using the ATR, to kind of set those stop losses, to kind of set up that risk to reward ratio. Now, again, depending on the type of trader you are, depending on the type of strategy that you're going to use for your edge on your entries and exits, it's kind of good to know what you're looking to expect. I would realistically look to expect a 1-to-1 on any one of my trades. Again, I have taken trades where I've used a 25-point stop loss, taken 10 points, just kind of boost those win rates up if the market is trending or the market's a little bit more choppy and I'm not really looking for that all day kind of move and I just want to get in and out. So it all really comes down to how well are you going to implement the plan that you're coming in for the day. Now, what we're going to do here is I'm going to take the ATR, but I'm going to kind of go a step further. So down here on the bottom, you can kind of see the average true range on the 5-minute time frame. So if I just pick a random time, let's just, pick any time off the bell here, 7 a.m. and I scroll down here and I look at the ATR is sitting at around 10 points. Okay, so 10 points on any given 5-minute time frame. Now, how many times have you found a trade setup, get into the trade, and within 5 to 10 minutes later, you're getting wicked out, you're getting stopped out because the price action is going up or down? That's basically because you're not giving the trade enough room to wiggle within inside its range and your stop loss is way too tight. So a lot of times people will come in to want to set a 10-point stop loss. However, this thing can wick around, the NQ being thing, that this thing can wick around 10, 15, 20 points, stop you out and still go and continue in the direction that you thought it was going to go. So what I would suggest to do is let's take it a step further and let's add another indicator on our charts. That way, because as human beings, we're very, very visual people, right? We learn by not only seeing, we learn by doing. And if something is physically placed on our charts, giving us a reason to get into a trade, meaning your strategy or your edge, and giving us a reason to kind of set that stop loss and take trades off the table, and we ignore, then it doesn't come down to the trading system or strategy. It more so comes down to you not following the rules and you not being disciplined and you kind of just trading on emotions. So what we're looking at here is, if you look at this white line here, this is the ATR trailing stop indicator. All of the settings are going to be generic. They're going to be standard settings. So all I'm going to do, I'm on the Thinkorswim platform. I'm going to go up to studies. I'm going to go to add studies, all studies, scroll down to A through B, and I'm going to come down here to ATR trailing stop. Okay, ATR trailing stop. That's it. I'm going to click that. The only thing I changed on here, the only thing I edited was just making the buy and sells white instead of having them two different colors. It is what it is. The ATR period is 5. That's standard. I'm not changing anything. The ATR factor is 3.5. I'm not changing anything. We're looking at average type Wilders. We're looking at first trade long, trail type modified, so forth and so forth. Everything is pretty standard. The only other thing that I did change was the width to 3 to make that line a lot thicker so I can see with my old age. So now let's kind of tie this into our 20 SMA trading strategy. So we obviously know anything below or above the 20 SMA, we're looking for that confirmation to kind of get into the trade. Now, if we go back to Friday's price action, that first hour to hour and a half of the market open was extremely choppy. Okay, extremely choppy. I would be very, very surprised if a lot of traders didn't take some trades and get stopped out relatively quickly within that first 30 minutes, hour and a half of the market. I know I did. I got stopped out of a few trades looking for those quick scalps, set the stop loss too tight, and I didn't actually make any real money until later on in the day when we started to trend in a little bit of a direction. So how we're going to use this ATR trailing stop indicator is going to be very, very simple. If we're looking for our entry over or below that 20 SMA and looking for the confirmation, example, your first trade setup was going to be long, okay? Your first trade setup was going to be long. But one thing that I want to kind of point out here is if the ATR trailing stop indicator is above, right, then we are not looking to take profits into this ATR trailing stop indicator. We are looking to short, okay? We're looking to short, and we're looking to use this as our stop loss. So on this particular setup that we get at 6:40 in the morning, even though it confirms at 6:45, our ATR trailing stop indicator is above this price. So this is going to automatically let us know we are not looking for the long, but in fact, looking for the short, because we're going to use this indicator as our trailing stop loss. We're not using this indicator as a take profit zone or a confirmation to get into a trade zone. We're using it as a trailing stop. So this is going to automatically discount and discontinue this long setup. Now, when you do get the short setup, which happens here, no confirmation on this 6:55, 7 a.m. candle, but we get the confirmation here. Actually, the first setup what we get is the 6:45. You get a few of them because, like I said, the market was extremely, extremely choppy. So realistically, if as we're doing this back test, we would have been looking to get into the short position at 6:50. At 6:45 Pacific Standard Time, we close below the 20 period moving average, okay? And then at 6:50, we confirm that low. So we would have been getting short at 6:50, and what are we using? We're using the ATR trailing stop as our stop loss. So our stop loss from an entry of 15,920, our stop loss is sitting up here at 15,955. So automatically, because it's on your chart, you can already see that you're gonna give up 35 points if we close above that ATR trailing stop. Now, if we close above that ATR trailing stop, if we're trading one micro contract, we're going to be down $70. So you can then manage your position sizing based on how much risk are you willing to lose on one trade if it does lose. So if we're trading two contracts, we're looking at around $150 loss. And if we're trading three contracts, we're looking at around 225, so forth and so forth and so forth. And that's kind of how you can kind of set up how many contracts do you want to trade on this particular trade. And what we are going to target is a 1-to-1, automatically taking profits off the table at 1-to-1, or a 1-to-2, 1-to-3, whatever it is. So we're looking for 2 Rs, 3 Rs, 4 Rs, 5 Rs. It doesn't really matter. Now, if you're only trading one contract, then I would say and recommend to go to that 1-to-1 risk to reward ratio, because you have no contracts to take off the table to kind of let run. If you're trading two, then at your 1-to-1, you're going to take one contract off the table and you're going to see if you can squeeze that 2R out of that remaining runner contract. If you were trading three contracts, so forth and so forth, you can kind of see how you would let those runners run and run and run. So automatically, if we're going to give up 30 to 35 points, we're going to look to take profits at 30 to 35 points. So let's see if this trade confirms for 30 to 35 points. That way we can take our 1-to-1 off the table. If the entry price is 15,920, we're going to simply scroll down here and move to the right. We can see that at this time here, we come down to 15,900, which is 20 points in the money. And if we continue to go down, we need this to hit 15,890 for that 30-point take profit. That happens here. And if we're looking for the full 1-to-1 at 35 points, then we would let it come all the way down to 85. And that's going to be here. And you would have taken profits either between 7:25 and 7:30 in the morning for a full 1-to-1. So while everyone else was getting chopped up here because the market's going up, it's going down, it's going up, it's going down, you know that you got your setup here. Here's your entry. Even though we do spike over this ATR trailing stop, we cannot get out of the trade until we close over, okay? Over. We have to close. The wicks, we cannot afford to get shaken out of the wicks. We have to let the candle close. So even though you would have been in a full 1-to-1 kind of drawdown at this point in time, You got to bite down, you got to breathe, you got to relax, and you got to tell yourself, I trust my strategy, I trust my technical analysis, and I trust my risk management that this one trade, even if it does lose, is not going to blow me out of the water. And if you would have trusted your strategy and trusted your risk management, you would have been able to get profitable and take money on this trade. Now, notice when we do close back above, okay, this 20 SMA, our ATR trailing stop is still above, okay? It is still above our entry. So even at this point in time, yes, this does confirm a 20 SMA play, but if you want to use this trailing stop indicator as a stop loss, then what you need to do is wait for this to shift to where it falls below your entry, and you would have been getting long here on this breakout at 810. So your entry would have been somewhere around 15,955, and your stop loss is all the way down here at 15,866. This, guys, is almost 100-point stop loss. It's about 80 to 90 points. So if you do want to take the trade, you have to identify your risk going into the trade, because these numbers on the screen are not magic numbers. They're not made up. It's due and related around the price action that the market is giving us. So if the market is giving us these extravagant ranges, it's not like we can just automatically cut these ranges in half and call it a day. You have to respect the technicals. So one contract at around the 90-point stop loss, again, this is huge, but listen, one contract, micro contract at a 90-point stop loss is around $180 loss. If you trade two of them, you're going to be down almost 400. I would say if you're on a prop firm, I would not lose any more than $250 to $500 in a given day, depending on if you're on a $25,000 account, a $50,000 account, or a $100,000 account. $500 a day would be my max loss. However, this trade is probably indicating to me that I can only afford to play one contract at a 150 loss or 180 loss, or I can only play two contracts at a $400 loss, okay? So understand that. And if we're looking to kind of risk that 80 to 90 points, well, then we for sure need to get close to that to be able to at least make our risk to reward worth it. And that's the only time that we can kind of take profits on this particular play. So if you notice the entry at around 956, we are going to need this to go up at least 80 to 90 points before we can think about taking profits. So let's just kind of do the math here and let's see how this plays out. From an entry price of 955 all the way up to 16,005 is 50 points. And now we need to go up another 40 points. And that would be here, guys. Right here, almost at the top for your full one-to-one. So if your entry price is here and you sit through a little bit of drawdown, you use this ATR trailing stop as your stop loss, and you target that one-to-one, even one contract here, you would have been up $180 on one particular trade that lasted anywhere between 8:10 in the morning here all the way to around 9:45. So this trade you would have been in for close to 2 hours, but made a full one-to-one. If you were trading two contracts, it would have been almost a $400 trade here in a matter of 2 hours. I don't know any place that's hiring right now offering $200 an hour for 2 hours worth of work. Again, unless you have some crazy skill set out there, not a lot of places across America are hiring at $200 an hour. So just to kind of keep that in mind. But this is how you can manage your risk, and this is how you can kind of be less stressed in the trade when you use this ATR trailing stop indicator as your stop loss, because it's also going to allow you to set up the number of contracts that you want to trade based on the amount of risk that this particular trade is giving up. So again, let's say, for example, you're on a small account. Let's say you're trading the Apex Trader Funding $25,000 account where you have $1,500 worth of drawdown. I am not going to, on an 80 to 90 point stop loss, be trading any more than one micro contract. So even if I lose, I'm going to lose around $180 to $200, which if I do lose that amount of money, I'm going to stop trading on the day and come back tomorrow And if I do hit my take profit on this, I'm going to make around $200 on this trade. And that's a fantastic return on your investment for that size account. Again, I hope this video helps you guys. I have one spot left in Evolution Traders. If you guys would like to join and trade with the team, get access to the courses, the strategies, the lessons, the one-on-one coaching and mentorship, the watch list, and that live trading webinar each and every single day. It's half price, guys. I only have one spot left. If you want to take advantage of it, come in the room. I'm happy to work with you guys. I'll see all of you guys on the inside.